Thank you for standing by. This is the conference operator. Welcome to the New Pacific Metals Corp. Silver Sand Pre-Feasibility Study conference call. As a reminder, all participants are in listen-only mode and the conference is being recorded. After the presentation, there will be an opportunity to ask questions. To join the question queue, you may press star then one on your telephone keypad. Should you need assistance during the conference call, you may signal an operator by pressing star then zero. I would now like to turn the conference over to Andrew Williams, CEO of New Pacific Metals. Please go ahead.
Thank you, operator, and welcome everyone to this New Pacific conference call to review the results of our PFS for silver sand located in Potosí Department, Bolivia. This announcement marks an exciting milestone as we continue to advance silver sand. Not only is this the first reserve that has ever been put on silver sand, it's the first reserves in the history of our company. A copy of the news release is available on our website and will be filed on SEDAR and EDGAR. Before we delve into the specifics, I'd like to take a moment to thank our Bolivian partners, the entire technical and Bolivian team, and independent consultants who worked tirelessly to deliver this high-quality report and who continue to work to advance the project. I'm joined on the call today by our Vice President of Operations, Dustin Van Dorselaer. Just take a quick moment here to remind you that we will be making forward-looking statements during the call. Please refer to the cautionary statements included in the news release and the presentation slides that accompany this webcast. I'd like to start off when talking about silver sand by reminding people that it's first and foremost a large, high-grade, near-surface silver deposit. This can be seen in our mineral resource estimate that's shown here. As we went through the engineering for the PFS, we of course discounted the inferred resource estimate, but we also made the decision not to include several small satellite pits that made up part of the resource in order to provide a more simplified, streamlined mine plan. This gave us a proven and probable reserve of 52 million tons containing 175 million ounces of silver. I think it's also notable that the grade of the ore body remains high at 105 grams per ton silver and that we did not do any further drilling on this deposit. The PFS we produced is an independent report, which means that we provided support to the external consultants, but ultimately the conclusions are theirs. AMC did the work related to the mineral resource, as well as the mining and infrastructure engineering and the financial analysis. The geotechnical work was done by Itasca Chile and Hydrotechnica. Halyard did the metallurgy and processing work. Newfields did the engineerings on tailings and water management, and the environmental and social work was done by Tierralta and Wood. We think this was a top team of consultants, and we're happy to continue working with them. As we saw in the PEA, silver sand is a very attractive project, and the PFS has confirmed that. On an after-tax basis, the PFS has an after-tax NPV5 of $740 million at $24 an ounce silver and $638 million at the constant PEA price of $22.50 silver. The after-tax IRR of the project at $24 an ounce silver was 37% and 33% at the PEA price of $22.50 silver. The economics came down a little bit compared to the PEA, and the main drivers of that were a modest capital cost increase, which we'll discuss on the next slide, a decrease in the amount of mineralized material as certain satellite pits were excluded from the reserve, and an increase in sustaining capex, mostly due to dry stack tailings storage costs. The operating cost is estimated at $10.69 an ounce silver, all in sustaining, and the payback remains a healthy 1.9 years on an after-tax basis. The initial capital cost for the project is $358 million, and the sustaining capital is $85 million over the life of mine. This number is based off vendor quotes for comparable projects from the engineers' databases. A few things I'd like to highlight is first, we'll be using contract mining, which means that we'll save on the mining fleet capital, and we based our mining costs on using a contractor that's currently operating in Bolivia. Secondly, we expect to benefit from the extensive local infrastructure in the area by tying into the electrical grid and having access to existing roads. The key differences in the capital cost compared to the PEA are associated with moving some waste stripping that we had in the early years of the PEA schedule in the production phase up front to the pre-production phase, and larger silver leach tanks. So showing on this slide 7, the full set of data here. I think there's 3 numbers though that I'd really like to point to that tell the story at Silver Sand. Firstly, our initial capital remains manageable at $358 million. Secondly, the total gross revenue of $3.8 billion shows that the project has plenty of heft to work with. And finally, the all-in sustaining cost, $10.69 an ounce, which means that we can operate the project at a very healthy margin based on current silver prices. When put together, these 3 key factors show how you get very strong economics at the bottom of the slide, $140 million after-tax NPV and a 37% IRR and a 2.1 to 1 NPV to capex ratio. On slide 8, we have our project sensitivities. As expected at lower silver prices, the project remains attractive, but we are really excited about the fact of what our project looks like at $30 an ounce silver, which is a price we've seen several times over the last months. At $30 silver, this project would have an NPV5 over $1 billion and an IRR of 48%, both on an after-tax basis, of course, and that's really incredible, I think, and shows the potential value of this project we have here at Silver Sand in a constructive silver price environment. So slide 9, looking at next steps. As we've communicated to many of you over the past while, we're continuing to work to finalize our environmental impact assessment study. As well, we work in parallel, engaged with the state-owned mining company Ball to obtain ratification of the signed mining production contract. And I'll just flag that I've recently returned from a trip to Bolivia and have full confidence in our team that they continue to make constructive progress towards both of these objectives. And just lastly, wrapping it up, we thought it was fun to put a slide together stacking the Silver Sand project up against 4 other silver projects and 4 other gold projects in its precious metals peer class. This is a very high quality group of projects. Several of them are either in or near to construction. And to be frank, Silver Sand's economics and the other project metrics hold up really well when compared to these projects. And I think as we move forward on the development at Silver Sand and also Carangas, I think the value of these assets we have will become even more apparent, and we're excited to keep moving these projects forward. And with that, I'd like to open it up to questions, operator, if there are any.
Certainly. To join the question queue, you may press star then 1 on your telephone keypad. You'll hear a tone acknowledging your request. If you're using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star then 2. Our first question is from Joseph Rieger with Roth Capital Partners. Please go ahead.
Hey, Andrew and team. Congrats on the strong PFS. So I guess first question, you guys gave a little bit of an update on permitting, but how do you guys see the timeline forward from here? And then, looking at your market cap compared to the initial capex, what do you think the most likely way would be for you guys to finance and construct this?
Yeah, hey Joe, thank you for the question. So I guess to your first comment about the timeline for permitting, I guess it's I've kind of always said that it's challenging to put an exact date on when we expect to wrap this up. As we've talked to you and disclosed, this is an issue about reaching an agreement with local communities, involving human beings and many different interests that we're diligently working to align. So it is difficult to say exactly when we're going to get that all wrapped up, but I think what we can say is it is very feasible that we can put something together by the end of this year, let's say, assuming that we continue to march along the path that we're on. But that being said, it would be misleading to say that that's a firm target. Again, we're dealing with an uncertain situation, so there's sort of some plus or minuses on that. But all being said, continue that under the assumption that we continue to march along. There is a realistic scenario where we can certainly have these agreements in place by the end of this year. And I think Secondly, the point about financing, it's the sort of the $1 million question, pardon the pun. But I think as we said all along, that's a problem and a bridge that we'll cross down the road. I think as what we can do to put ourselves in the strongest position possible when that time comes is to continue to do high quality work with regards to engaging with the local communities, with our permitting exercise and our additional engineering exercises, so that we can put our company in a position where we could credibly finance and build this thing ourselves, and then go down that path, have a really good hard look at what that would look like. And then with that data in hand, we're in a much stronger position to evaluate all options on the table for financing, whether that's in-house or externally. I've seen it, time and time again where junior companies, they just operate on the assumption that they're going to get bought out, and they take their foot off the gas pedal, and it ultimately puts them in a much weaker position when it comes time to financing. So I think for us, our mission remains the same, where we're going to continue to focus on getting our work done with project development and engineering, and we'll see where the chips fall. So I'm sorry I can't give you a concrete answer, but it's not possible to give an answer at this time. I think the best thing for our shareholders is that we continue to advance the project diligently, and we'll see where things fall out when it's time to finance the project.
Okay. Thanks for that. That's a very well thought out answer. One other item, I noticed that the recovery rate assumption dropped, I think, about 1% from PEA to PFS. Is that something that changed? Or is it something you guys learned via, additional test work, or is it just conservativeness by the third party?
Yeah, good pickup, Joe. As we went from PEA to PFS level engineering, we took everything goes into greater detail. That included some more rigor into our geological model, characterizing the different oxidation states. And I think we ran for the PFS, as a result of that exercise, a slightly higher overall content of sulfide material compared to the PEA composite. And so when we took that revised composite with slightly higher sulfide content through our PFS metallurgical test program, it ended up dropping the recoveries slightly from 91 to 90%. But the positive offset to that was that our cyanide consumption came down as a result of the test work too. So as part of the PFS, the percentage, the operating cost dollar per ton came down slightly on lower cyanide consumption. So even though we lost that point on the recovery, we actually picked up almost all of it back with reduced cyanide consumption over the mine life. So yeah, it was a product of the increased engineering work that we did for the PFS.
Okay, thanks. I'll turn it over.
Thanks, Joe.
The next question is from Felix Shafigullin with 8 Capital. Please go ahead.
Hi, Andrew. Congrats on releasing the PFS. Can you give a little bit more color on that artisanal miner situation and what's going on around that?
Yeah, happy to. Thanks, Felix, for the question. As we've talked to in the press release, as is typical of many development projects, this is Bolivia is very much a mining country, and artisanal mining is certainly a part of the culture. And so at our Silver Sand project, it's something that we have and are proactively managing. And I think as we've continued to engage with the community and push the project forward, we've decided that it's in the best interest of our company and the community and the broader stakeholder group to proactively move forward with these legal proceedings that we talked about. So we're now in the process of conducting the legal process. In parallel, we're also working with the AHAM, they're the mining registrar of Bolivia, and they've formally acknowledged our rights and are moving to help us in close association with the government authorities of Bolivia to enforce that order. And I think it's all, again, when you step back and think about it at a big picture, it's all part of the process that we've been working on for several years now to earn our social license in the area. I think the idea of large-scale productive open pit mining is just there have been very successful open pit mines in the history of Bolivia, but it takes time to socialize that concept. And that's part of what ultimately we need to work through with these artisanal mining groups that are in the area. As again, this is a sort of a fairly typical issue that arises in terms of social development. So it's a manageable situation in our view, and we've got some really good support internally, externally, and we're confident that we'll find a sustainable solution here in the not too distant future.
And do these artisanal mining groups, do they belong to any of these mining cooperatives that you need to deal with? Like, I'm just trying to gauge how, is it just a handful of individuals just kind of illegally mining on your property, or are they organized?
No, these groups, they're not, the mining activities at Silver Sand are not associated with the cooperatives in Bolivia. They're private individuals.
Okay, gotcha. Okay, so pivoting away from this question, and then that'll be the last question for me, I think. I don't know, I think it was kind of maybe addressed already to a certain extent, but so your operating costs are, kind of down across the board in the PFS compared to the PEA. Could you just give a little more color on what's driving that? I think I heard lower cyanide consumption, but is there anything else? Well,
I think our mining costs on a per ton basis ticked up slightly. I think it was, we're up at, I think it was $235 a ton in the PFS. So that one ticked up a little bit. Processing cost, yeah, the big driver there would have been on the cyanide consumption, coming down slightly. I will make the note though that our sustaining capital costs did go up, and that we felt we did some really good benchmarking activities on the cost of tailings disposal, and we added a little bit more as a little bit more into the sustaining capital on the tailings disposal end of things. And the G&A cost, yeah, we got some relief there. One of the nice developments is that there's been a road that the road that takes you to the Silver Sand project. The government is committed to widening and upgrading that road. And so what that means is that instead of us having a very large camp that houses the bulk of the workers, that now puts us in a stronger position to be able to have workers commute in and out on a daily basis, and that helped reduce the need for a larger on-site facility. And so that would have contributed to some reductions in the G&A costs. But I think across the board, our all-in sustaining costs, yeah, still kind of came in at around that $10 an ounce range, consistent with where we were in the PEA. So there were some wins and losses, but generally speaking, things held the line quite nicely.
Okay, all right. Thank you very much, Andrew.
Thank you.
This concludes the question and answer session. I'd like to turn the conference back over to Andrew for any closing remarks.
Okay, I would like to thank everyone for tuning in today. And myself, our management team, and our communications team are available for any other questions you might have going forward. Please don't hesitate to reach out, and have yourself a wonderful day. Thank you.
This brings to a close today's conference call. You may disconnect your lines. Thank you for participating and have a pleasant day.